All right, let me guess. Every time you enter a trade, you're a day trader, right? Every time you enter a trade, you just constantly feel like you're fighting the trend, no matter what you do. If it looks like it's in an uptrend, you enter long and it gets stopped out. If it looks like it's in a downtrend, you enter short and you get stopped out. And you're just thinking to yourself, what the hell am I doing wrong? Why is it almost like every time I enter a trade, it's a counter trend trade? It feels like a counter trend trade. I know the feeling. So in this video, I'm going to show you how I walk in to my Discord almost every single morning in the morning game plan, and almost every morning I get the direction the market wants to go right, meaning that my trades on the 1 minute chart or even the seconds chart are going to be a lot less stressful for me, and I can ride winners a lot longer because I'm in line with the overall trend, aka the bias, whatever you want to call it, okay? At the end of this video, you're going to see how I caught a 10 to 1, yes, 10 to 1 risk to reward trade using the techniques that I'm about to show you in this video. So if that doesn't sound good to you, you can leave the video right now. But if it does, make sure to smash up that like button, hit the subscribe button, and tickle that comment section with what you think about this video. And of course, if you want to support the channel, you can use the codes and links down below for the best discounts on your next prop firm purchase. I have nothing to sell you. I only have a free Discord that is designed to make you a better trader, just like the best trading firms on Wall Street, and it's 100% free, so make sure to join it. That being said, let's get into the video. Before we get into the nitty-gritty, you need to understand what moves the markets, okay? And what moves the markets, there's pretty much two concepts, in my opinion, that are the only two concepts that you need to understand where price is going and how and when it's going to turn around or continue, okay? And that is going to be liquidity and imbalances, okay? AKA supply and demand, AKA order blocks, okay? So if you don't know what liquidity is, and if you don't know what supply and demand is, or an order block, it's pretty simple, okay? It's going to be previous highs and previous lows and areas where we saw a massive move in either direction, okay? So in this case, massive move lower. So in this case right here, this would be an area of imbalance, or what I call supply, because we saw a massive tank lower after consolidating in this general area, okay? So basically, all you need to know is that the market is always seeking one of these two things: previous highs and lows, or previous areas of imbalance, okay? So that is all I use in both my entries, my trading strategy, and to get my daily bias, okay? So let's take a look at some examples. And by the way, these are all trades that I have taken that are on my YouTube channel, so they're not just hindsight bias, right? Every morning, what I'll do is I will get to the chart around 8 a.m. So I have the chart set to around 8 a.m. So this is what I saw on this trading day, okay? So what I usually do is I use the 1 hour to 4 hour time frame to find that daily bias, to see the clearest levels of where we are going, and then I trade in that direction, okay? So here we have a 1 hour chart, and we are at the 8 a.m. candle. So essentially, this is what I would be seeing once I get to my desk, okay? But what I see here is we have a clear high right up here, and so that is the very first draw on liquidity. That's essentially the magnet to price right now, right? We are not at those highs just yet, but price does want to get to that level, okay? So if we know that price wants to get to that level on a 1 hour chart, then we should only look to take trades long or buy on these smaller time frames towards this area. But that's not all we have, right? If we go to that 4 hour chart, we're going to see that we have this previous 4 hour level of supply, okay? And ignore the spoiler. So now we have two key levels that we can work with for the day. We have a previous high, and we also have that supply level, aka order block up there, okay? And so now we have a clear direction of what we want to trade, in which direction we want to trade. We want to trade up to these highs, okay? So very simple. So now that I have my key levels marked out, I'm going to drop down to my entry time frame, which is usually going to be a 1 minute chart. It can vary. It varies a lot. It can be a 3 minute all the way down to a 15-second chart. All right, but we're going to let this play, and we're going to let the market open, and we're going to see what happens, okay? Boom, the market opens, and we pretty much skyrocket right to that 1 hour high, okay? Now, it's at this point where I need to be ready for basically any situation. And so what I recommend you do is create an if-then thought process. And this is what I do in my morning game plan every day, okay? basically have your key levels marked out where price wants to go, and then be prepared for when price gets there. And so you want to create this if-then scenario analysis, okay? So every morning in the Discord, I will basically create this if-then thought process. So here's one from today. These gaps tend to get filled. I'm looking for shorts until the gap fill line. Then I will wait to see if we can bounce and switch my bias long. If we begin skyrocketing off the open, I will have to assume that we have a partial gap fill scenario and may flip my bias long there as well. And so I don't marry my bias, okay? I don't marry the direction that I think price is going to go. I wait for price to get to the levels and then show me where it's going to go, okay? So on this day, essentially what I was saying is that if we fail to close above these highs, right, the hourly highs, then I will look for shorts, right? So if we came up and rejected down, then I would look for short setups, okay? But in this case, we closed strongly above, right? We have a lot of momentum going up and above that level. We're closing above that level. And so now the scenario is if price stays above these highs, then I likely want to look for longs. Why do I want to look for longs? Because we have this big 4-hour imbalance that also still needs to be hit, okay? So now we know that this level is not holding, and so we have to naturally go to the next level if we want to find resistance, which is this big gray box over here, okay? So now what I want to do is look for longs, right? Now I know, right? The market has shown me what it wants to do, okay? It has proven to me that it doesn't want to hold this level as liquidity, so we're not going to sweep that and go lower. And so it has a high probability of continuing higher, right? And so if we know that, now I want to look for longs. I want to look for buys, okay? And so what I did on this day is I went down to the 15-second time frame and I started looking for those buys. Now, if you don't know my strategy by now, you should watch the boot camp, but essentially what I like to do is I combine the two things that move the markets, right? I combine supply and demand, in this case, a level of demand or an imbalance to the upside, and I use liquidity, okay? So clear lows and highs, right? So in this case, we have what I call a bullish order zone. Again, if you haven't watched the free playlist, check it out. Basically, all it is a level of liquidity, a low, and a level of demand, a area where we skyrocketed away from, overlapping one another, okay? I call it an order zone because it's an area where the most amount of orders are likely to be sitting. You have stop losses beneath this low, and then you also have that demand that's still sitting there, and so it's just a high probability area. So now I have everything aligned. I have a long, I have a buy signal above that hourly high, and I know that I can safely assume we're going to continue higher up until that 4-hour chart. So on this day, I took a long down in here, stop loss below this low, targets to the high, right? Because we think it's going to keep going higher. And so now we are not fighting the trend whatsoever. We have everything aligned. And so let's play it forward and see what happens. And there you have it. That was a pretty easy 4-to-1 trade, and a trade that I did actually take. It's on my YouTube channel, okay? Now, this is the beauty of having that daily bias correct. It means that you can get really accurate entries because you're not fighting the trend. You know what the trend is, you know where price wants to go, and so if you do get that entry signal, it is a lot stronger than just a random entry. You want to align your 1-hour time frame, your 4-hour time frame with your entry time frame. The bigger trend, the bigger direction with your entry time frame, so that you can actually use a tight stop loss and have a huge target because you're going along with the bigger trend. So let's just play this forward and see what happens. Let's go on to the next day. So now notice that we are in this area of imbalance that we marked out on this 4-hour chart. And this is at 3 p.m. So the day is pretty much finished. So let's just skip to the next day, the next opening day, right? The next opening bar. All right, let's take a look right over here. What do we see here? Okay, 9 a.m. candle. Let's get our daily bias, right? So what do we know? We know that price is now rejecting the area that we marked out previously, rejecting the imbalance, right? 4-hour imbalance right here. Okay, so now what am I going to do when I see this first thing in the morning, when I see this hourly chart rejecting this area of supply? Okay, I'm going to know that price probably wants to go to the next area of liquidity or imbalance. So in this case, that's probably going to be down here. Maybe you can even say right here, this previous high, okay, if you want to be conservative. So now I have my bias, right? I think that price is going to move lower down towards this general area. So I'm going to stick to that until proven otherwise. So if this were to come back up and break above these highs, then I probably wouldn't be looking to go short anymore, because now the level is failing and the market is showing me, it's literally telling me it wants to go higher, right? So let's drop down to the 1 minute time frame now and start looking for some trades. So you can see we're in this big area of resistance, right? And now the market opens, and what do? The market decides it's going to go lower, right? It's going lower here. We are making big moves to the downside, right? So now I know that my 1 minute time frame is aligned with my higher time frame, and I know that we are rejecting a bigger time frame level of resistance. And so basically what I can do is assume we are going here. At least we are going to try to go there. So in this case, I'm looking for bearish order zones. What does that look like? Well, the first step is looking for an area of supply. In this case, that's going to look something like this. We have a consolidation and then an imbalance to the downside, all right? And now I want to wait for a level of liquidity to form before I take this trade. I don't want to just blindly go short here. I want to wait for liquidity to form first, which just happened right there, okay? Now we have a high, and this is what I call a bearish order zone. So now I'm looking to take shorts down here if possible. I now have the intraday time frame giving me an area of imbalance with an area of liquidity, and so everything is aligning, right? We are rejecting a higher time frame level of supply, so we know that we want to go lower to the next level of demand or liquidity. And then on the intraday time frame, we're creating a bearish order zone, and it's the perfect setup, right? You're aligning both time frames. You're aligning the short-term trend with the long-term trend, and so this makes the trading so much easier, okay? And so this trade looked something like this. I set an order right at this area of supply, or I believe it was at 25,270. Put our stop loss below or above the highs. So it's probably something like this if I had to guess. So let's play it forward and see what happens, okay? Our target's at the lows and our entry is at this previous level of supply. Oh, target's at the lows here. Okay, so now the risk to reward is even better. And there we go, okay? Now, could we hold on to this and try to bring it all the way down to full targets? Yes, and you're going to see that at the end of this video. Sometimes I will hold to the higher time frame target, which gives you crazy risk to reward, just like this. This is a 9-to-1 trade. The one that I'm going to show you at the end of the video is a 10-to-1 trade, right? Now let's take a look at this example here. We've now done exactly what we thought was going to happen, which was reject that bigger time frame level of imbalance, right? And so now we're just kind of waterfalling down. So where is the target? Where is price likely to go? Down to this area of imbalance here, okay? So that's essentially the next target for price. And so if we were trading this, we want to go down to the 1 minute chart in this example, and now we have a clear bias, right? We have this gray box as a target, and we are very close to that target, right? So naturally, we should be looking to get a short down towards that final target at the on the 1 hour chart, right? So this is the 1 minute chart. And so now let's look for a bearish order zone. And the bearish order zone is going to look something like this. Actually, I think it's on a 30-second chart. Yeah, 30-second chart. Here is a clear level of imbalance. And then we also have a clear level of liquidity, a high. And so now we have our two time frames aligned. We know that price is likely going to go to this gray box here because it's the 1 hour area of support. And it's basically going to act like a magnet, right? And then we have a bearish setup. We have a big imbalance to the downside. We have liquidity here. And now we want to look for a short down to here, okay? And that is going to look something like this. Get short at the break of the highs into the area. This is what we call a bearish order zone. And then you target down to here if you really want to. But conservatively, you probably are going to target right to these lows over here. But the extended targets could be as far down as this box down in here. So a 6-to-1 trade, and this is about a 4-to-1 trade. All right, so now we have everything aligned. We have our small time frame, we have our big time frame. They're all pointing down. So we know we're not going to be fighting the trend here. It should have a continuation. So let's play it forward, and let's see what happens. Okay, slowly but surely, all the way down, and I'm pretty confident we get down to that final target. And now watch what happens when we enter this bigger time frame, right? If you were trying to trade this short for example, and you did not know that there was a 1 hour zone here, you'd probably be getting wrecked every time, because watch what happens when we enter this zone. You think you're trading the trend, right? You think you're going short here, right? You're going short somewhere in here or here, and you think you're trading the downtrend, but in reality, you have no idea that you are reversing on a dime at a big area of support there. And so you wouldn't really actually want to look for shorts. You'd probably want to be looking for longs to the upside, even though it looks like a massive downtrend. All right, now let's talk about the moment you've all been waiting for, how I managed to get a 10-to-1 risk reward trade. So let's take a look at the morning game plan. All right, it's 8 a.m. right here, and this is the hourly chart. And as you can see, we're at all-time highs. I mean, you literally have nothing to the left to base where price is going to go off of. So in this case, I am willing to go down a little bit further to the smaller time frames to get a general idea of where price is going to go. So 15-minute chart, for example. So let's break down this 15-minute chart and find where price is likely to go, or where it has the higher probability to go. And so let's just start marking out our key levels. Right here, we have clear lows, a double bottom. And so we know that people are putting their stop losses below this level. So this area should act like a magnet. And so in my morning game plan, what I said is that I believe that we are going to come down to these lows at some point in the day. Why do I think that? Because, like I just said, it's a level of liquidity, a big level of liquidity, but also because, as you can see right up here, we have an area of supply that we are actively moving down and away from, right? And so if you have an imbalance area, right, where's the next point that you should go to? Another area of imbalance or liquidity. In this case, the liquidity is down here. So we've created a lower high and we have liquidity down in here. And so my bias now, where is price going? Logically, where do you think price is going? Down to these lows. So that's how I'm going to trade accordingly on the smaller time frames. So let's let this market open up. We now have basically our two areas of interest. We have this area of resistance and we have this area of support, and we want to look for shorts down to this area of support, essentially. So let's let the market open here. Okay, so now the market has opened, and I took some trades down here trying to go short, but nothing really came of it. But let's take a look back at that 15-minute time frame. What do we see? We made a break for those highs, the level of liquidity, and this area of supply, and you can see that we strongly rejected that area. Go to like a 5-minute, we strongly rejected that area. So now guess what? We know we have just taken out an area of liquidity, a key level, and we have rejected back down. So what does that mean? That means price is going to want to go to the next area of liquidity. So where's the next level of liquidity? All these lows down here are the next levels of liquidity. Or an imbalance. I mean, you could even say it's going to come down to here because that's a level of demand. It doesn't really matter. You just now know that the direction is down for the most part. It has a much higher likelihood to go down. So we're still going to look for shorts. Okay, so even though this thing looks like an uptrend right now, it looks like an uptrend, we know that actually this thing should probably continue to the downside, okay? So now I'm going to look for a bearish order zone. And so that order zone is going to look something like this, right? We have a double top, we have our area of supply, and we are going to look for shorts outside of this zone. So let's see what happens when we get into that area. We take out those highs, okay, and now I'm not in this yet, actually. I believe I took a short there and I got stopped out for break even. We're going to come all the way up to the top of that zone, and then we're going to print this big red candle here. And I actually re-entered on this candle right here. This is the video that you can find it on. It's titled How I Top Tick NQ Daily, 10-to-1 risk to reward. And so the trade looks something like this. I got short right around here, risked above the highs, and then targeted that next big area of an imbalance. So look at this on the 5-minute chart, right? This is that area of imbalance, and it's also a previous low right here, okay? And so now let's take a look what happens when you align your higher time frame with the lower time frame entries. Let's play it forward and see what happens. Bang. And if you don't believe me, here it is on the YouTube video happening in real time. And here's the trade on the Ninja Trader. Got short right at the top, basically, and there's that last target getting hit. Took some partials along the way. So that is how you use higher time frame levels of liquidity and imbalances and lower time frame levels of liquidity and imbalances. Align the two to have pinpoint sniper entries with massive risk to rewards, just like you see here. If you enjoyed the video, all I ask is you smash up that like button. And if you want to support the channel, use code ST at Apex Trader Funding for that 70% off and a $40 activation fee, a crazy deal. And if you don't like Apex Trader Funding, I have all the best discounts on all the best prop firms. Links in the description down below. Join the free Discord while you're at it, and I'll see you in the next one. Peace.